Hello, today is the 21st of September 2010, and welcome to today's Silver Log, some technical analysis. And the technical issues on my end have now been cleared up, and I am ready to go again with some more silver charts, some more silver analysis. And we've seen a nice little run or rally over the last month or so within the silver market, with an increase of about $3 per ounce, or roughly 20%, which really is not that big for silver. We're used to seeing 4, 5, 6% up and down days. For now, those days are gone. We do have the Fed speaking today at 2:15 p.m. Eastern. I am recording this at roughly almost 1 p.m. Eastern. So you can expect some volatility within the markets, including silver. I'm going to make a calculated guess that they're going to say that the interest rates are going to remain the same and they'll keep them low for an extended period of time. We're having a very, very slow, fragile recovery. And I've been hearing today from a few people who have sent me messages and some videos that the recession ended in June of 2009. Wow, interesting information we are getting from the mainstream media. So we'll throw that away and we'll now take a look at the technicals. This trend line, this uptrend line, has been very, very significant. We've had one test of it here, we've had two tests, we've had three tests, and at some point we are going to have a fourth test of this level, but for now, the next test is this 2135 area, which was resistance back in 2008, or it was the intraday high in March of 2008. But the break of this trend line, the around 20 per ounce, 19 and 3/4 to be more specific, would be an area I would like to see come back and test as support. That doesn't mean it will happen. For when big resistance is taken out to the upside, what you like to see is a retracement back to the level where it can then move higher and make new highs. But that doesn't mean it will. Gold had 1,000 as a big resistance level for quite some time. It got above that area in 2009. It has yet to come back to it. And if you go even back further to the Dow Jones, when it got above the 1,000 barrier, it never came back to that area of support. So if you have some big moves, say we go up to 23, 24, then I won't be saying I want to come back to 21. At that point, or sorry, 19 and 3/4, I'll be saying I want to come back to 21. And the more higher the price goes, the higher the expected support you would expect along the way. So I'm not going to take a look at this on a shorter term period. We'll take a look at this from April on to now. Now, some of the data that I had on my computer was lost, unfortunately, and most of it was the stock data. So I've lost some of it. No big whoop, because I can get a lot of it back, and I already have. However, nonetheless, the data that I had from April of 2008 on the 15-minute time frame, I no longer have. However, looking at this on the hourly chart, this trend line obviously was taken out, and a major, major explosion to the upside from that point. We have now went below this 5-day moving average. The 5-day moving average was supported here, and it has went through it, which is to be expected. Just because it's went through it doesn't mean that things are in poor shape by any means, for you would expect to have a retracement. Now, as far as the Fibonacci is concerned, we can see that we have a bottom roughly at around 18 and a top which it got up to 21 on a closing base, or not on a closing, but on an intraday basis. So we'll use the numbers 18 to 21, and we'll take a look on a Fibonacci calculator what that would be. So with 18 and 21, we have a 61.8% retracement back at 1980, and the 38.2 at 1909. I will make this spreadsheet available at some point. I had the other one on filefront.com, and I went to download it because, like I said, I lost a few of my documents, including my Fibonacci calculator. And then when I went to it, they said the link was broken. So I would like to find a site I can upload this XLS file and where someone can download it. If you know of any good ones, let me know. I'll take a look at it later and have it available. It's got the exponential Fibonacci. It has the linear Fibonacci along with upside and even downside potential. So therefore, that is the Fibonacci we would be expecting is roughly towards this level here, which is where we had the significant resistance from the May high. Some of these other moving averages, this orange looking line is the VWAP from the start of this breakout. And at some point, you would expect that to be an area where support would be found. And we've been well overextended. We do need a price correction, whether it be through time or whether it be through a downward price. We had a small correction in here. We had another correction in here. And we are having our third one right now. It might be correcting through time, and it might be correcting through price. Further move is from 21 down to about 26. That's only 2%, so that is not much of a correction at all. The green line is the 50-day moving average, and it has broken away from the 50 moving average extremely big time, meaning the distance from the two is well over 10%, and this blue line represents the VWAP from this high, which really coincides a little bit with the 50. However, the 50-day moving average will be rising higher than this blue line should be. But like I say, everything is extremely bullish right now on many different time frames. On the 15-minute chart, this is SLV, and right now it looks like it's breaking below the support level, which is very normal. So just keep your eye on things on the blog. There will be updates, and have yourself a great day, everyone. Bye.